Welcome back, guys. Johnny here, and in today's video we're going to go over a strong buy. In my opinion, it is Northrop Grumman, or ticker symbol NOC. We're going to go over some of the fundamentals. We're going to go over some of the technicals. We're going to analyze this, and we're going to check out the dividends as well as some recent news. So let's get started. So, for all of you who don't know who Northrop Grumman is or what they do, it's basically it says industrial sector, but more so, they are a type of security business. It includes products, systems, and solutions in autonomous systems, cyber command controls, computers, intelligence, surveillance, reconnaissance, a lot of different things. But they're basically like a defense company, like LMT or Lockheed and Martin, I believe, somewhat like that, pretty much. So let's get into it. First off, for all of you Robinhood users, they're 77% of analysts are saying to buy this company. It is a buy rating, so 77% of analysts are saying it is a buy. Now they're up $2.30 right now, and I'm trading live last couple 10 minutes of the market. For the week, they are down, and also for the year. This is probably better off, and I should have loaded this before. The wind is crazy out here today. So on their 1 year, they're actually down 21%. So a lot of people are probably going to come to me and say, Johnny, why would you invest in this company? They're down 20%. They're losing money. What's happening? Well, 20% is not that bad overall compared to their 5 year. They're up 60% in 5 years. You tack on that 20%, they'd actually be up 80% in 5 years. So they're actually up 100% in January. So I would take 100% profit and take a small 20% reduction in price because the growth is there. 5 years of growth. $103. It is there. And we'll look on Yahoo Finance as well at some of their max history. So stick around. And the dividends. As you can see, I have a small portion of it, about a third of a share right now. I did a video yesterday talking about this company for Monday, so I decided to go ahead and buy some yesterday. Up a few cents, not bad. This company was founded in 1939, so it's been around for a long time. It's in Virginia. Market cap is close to 50 billion. Might as well just say 50 billion. Their PE ratio is 20.85, so almost 21 for their PE ratio, which I love. I love low PE ratios. I don't like to invest in companies with PE ratio higher than 50. That's just my own preference. And they have a dividend yield actually closer to 2%. Robinhood is just a little bit wrong on here, and I will show you the facts on the NASDAQ calendar for dividend history. Average volume is 1 million. That's fantastic. They have 90,000 employees, and their CEO at the moment is Kathy J. Warden. Now, analysts are saying that it's 77% buy, and that's out of 22 ratings. That's really high for 22 ratings. Now, on the Bulls side, they're saying that defense prime contracts could offer some protection as the U.S. is currently in a recession. They're also saying there's an opportunity for material revenue synergies from its acquisition of Orbital ATK. And also, they won both the Ground-Based Strategic Deterrent Program and the B-21 Bomber Program. So those are some pluses, right? To see some material drive top line growth over the next few decades. Now, what are the bears saying? The bears are basically saying that there's a risk that the upstart like SpaceX will threaten this company, say for space contracts, space transportation programs, and satellites. They're also saying that that NOC, or Northrop Grumman, has a relatively high proportion for classified work, so it kind of limits what you can do. It's kind of more government based, which might close some doors in the future. And depends on the U.S. military funding for its sales, which is true. I mean, it's all based on political and uncertain times and processes that they have to abide by. So these are both published on Morningstar January 1st. Definitely check that out. Now, on Robinhood, they're saying that they're making right at about $6 for their earnings per share. Now, that's amazing. They are profiting tremendously, and that's an article we're going to get into in just a minute. Market buy back in March 2018. So I owned this company for a couple of days, man, 3 years ago. So now I'm in it a little bit more long term. Let's go ahead and go over to Yahoo. So let's see. So Yahoo, same thing. Their market cap's right there at 50 billion. P ratio's at 20. EPS saying it's at 14. Earnings per share is at 14.58, which is just fantastic. Forward dividend yield 1.97. So that is extremely. That's far more, a lot closer to the 2% mark than the Robinhood is saying. That's $5.80 every single year for owning a share of this company. Next ex-dividend date, the next one that's coming up isn't until, well, actually, it just passed, November 27th, 2020. Now, as you can see, their max chart way back here, you could have got this company for a total of, looks like, man, $6, $7, 9, 10, 12, 15, 20, 30, 40, and 2000 hit, you're up in the 60s. And then right here in 2012, it went from 65, and over the years it grew all the way up to $350. So this isn't the highest the company has ever been. It has some peak areas at $360 a share, so there's definitely room for it to go back to its normal price for sure. So leading to my next article here, everyone, from Yahoo Finance, this is just an article you can get. Link is above here. They're saying that an ROE of 23%, which is just fantastic. Now that's return on equity, which is great for a business and for capital investors. Now, what does that mean? Return on equity equals the net profit from continuing operations divided by shareholders' equity. Now, that means Northrop Grumman has an ROI of 23%. It says it right there, 23%. So that means they have $2.5 billion and divide that by 10 billion based on the trailing 12 months in September. And this means that over a 12-month period, that for every $1 that, say, I invest or a shareholder invests or you invest, for every dollar invested into this company, they generate 23 cents in profits. That's just amazing to me. That's a 23% return on investment. I don't know any, ETF right now, or certain things in the stock market, even not even the stock market itself, can give you returns that great right now. I think they're just trailing at like 8%, maybe something like that, 6%. But this is amazing. I mean, you see stuff like this maybe in real estate sometimes, but this is definitely a good company to invest in. Now, moving on to other parts, not only is it a good return on investment, but you get a dividend, and you get it every quarter. So you get it 4 quarters out of the year. This is saying 1.9% dividend yield, $5.80. Ex-dividend date was 11/27. Doesn't look like they have anything pending right now for the new year just yet. But as you can see, $1.45 in November, $1.45 in August, $1.45 in May, $1.32 in February, and that's just 1 year. And as you can see, they've been growing over time ever since. If you go back, they started in 2013 at 61 cents, and it has grown since then to $1.45 every single quarter. Now, guys, I know a lot of you who watch my channel would agree that I am a REIT investor and also a dividend investor. This is the company to do that right now. They're up 60% for the year right now, with potential to go up 100% if it rebounds. There's a lot of things going on in the market right now, but defense for the United States is not going anywhere. These government contracts that they do are not going anywhere. Research and money is going to be put into this company often. And even if you want to swing trade it for a little while, get a dividend for a few months or a few years, you can, because they have an average volume of 1 million. So it's very liquid. You're not going to be stuck in this position. If you want to get out, there's going to be opportunities to get out. So guys, that is what I think would be a strong buy overall. Do your research and never invest in something that you don't know. So, you guys have a great day. And don't forget to smash the like button.